Hello guys, so in this video you're going to learn how to spot fair value gaps and how to use them. Okay, so one thing I want to clarify is that fair value gaps and imbalances are the same exact thing. So fair value gaps basically are created when price is offered to only one side of the market. It's kind of like when you draw a line with a crayon really fast and it creates gaps, which are in this case fair value gaps. So it usually happens when price moves really fast and then sellers, or in this case buyers, are not fulfilled, so they get missed out, so price has to come back to fill those buy orders also. So what are fair value gaps on the charts? Well, they are bars just like this one that has no wicks or bodies of candles next to it. So in other words, it is just a naked candle. This is a fair value gap, this is a fair value gap, this is a fair value gap, and this is a fair value gap, this is a fair value gap. So we can find them all over the chart. So in this case we are looking at a market structure shift or a reversal of price. Here it reverses from bullish to bearish, and this will be a pattern that you will see often when a reversal is taking place. Usually what happens is that in the eyes of the retail minded traders, this should be called a head and shoulders pattern. But what really goes on in a head and shoulders pattern is that first a breakout structure takes place, which initiates a liquidity grab, which makes price go back up into a fair value gap that was created and shoot back down. So what do we see here? Okay, we see a break of structure, which is already a sign for a bearish market structure shift happening. What happens is that this is not enough of a sweep of the last low to gain enough liquidity, so price goes back into a fair value gap. You could also take this trade, you could also very well take this trade, but usually when you're here and you can't and you cannot see all this, when you are not playing in hindsight but in the live markets, you will not want to take this trade because you cannot be sure if this is just a liquidity grab to continue higher or just a reversal. The way that you can be sure is that you see a energetic displacement to the downside. Okay, so we see a displacement with a liquidity grab of taking out equal lows, then price runs back up for a fair value gap. Okay, and one thing ICT mentioned about fair value gaps, that they should be only traded in the context of liquidity and stop rates, or turtle soup patterns, or liquidity grabs basically. So here that part is also confirmed, because this is a high, because this is a lower high, and price takes that out, which is a liquidity grab, and plus that trade is confirmed by a fair value gap. So of course you do not want to take trades blindly of a fair value gap, because there is too much of it, and you want to know how to separate good fair value gap trades from bad fair value gap trades. And the way you do that is like I said, you take a high, and if price runs that, and you have a fair value gap, that is your entry. So that is really powerful. As you can see, price absolutely jammed to the downside. I'm just going to draw it out for you guys to see what's really going on here. So stop loss above the last high. Of course, the entry after the liquidity grab happens and it reaches into the fair value gap. Your take profit would be at the last low. Now this would be your first take profit. Your second take profit, like I told you guys in the symmetrical swing take profit video, that you want to use the range of the retracement, which is this, and project it below. That is your second take profit. You can see that is a 4.72 risk to reward ratio trade. So what you want to know about fair value gaps is that sometime or another they will need to get filled. Either now or tomorrow or next week they will get filled, because fair value gaps or imbalances initiate a unhealthy market. So of course this would be your first trade. Now let's look at the other one. I got two of those actually, right after another. Okay, so this is a re-entry of this trade. You could also take this entry if you miss this one. You could also take this entry if you miss this one. Okay, so this is absolutely the same thing. Okay, we got a lower high, and first we have a whipsaw effect happening. That just means that first, in a bearish instance, we take out sell side, then we run for buy side, and then we run lower. So of course we take out sell side, then we of course know that price is targeting buy side. But as I said, fair value gaps only are used to make entries with more precision. Okay, so we know that price will go above this high to take at buy side to run lower, but how much will it go higher? Well, to the fair value gap. This is what fair value gaps are used for. Okay, so here you go. Let's just draw it out for you guys. So right when it taps into the fair value gap, that is your entry. Okay, stop loss would be at the, well, in this case, if it of course has to be at the last high, but if the last high is too high out there, which creates a huge stop loss, you might want to just use the bodies of that range. Okay, so there you go. That is your stop loss. Your take profit would be at the symmetrical swing low, as I told you guys, just like in the other trade. Boom, here you go. Just like in the other trades, you take the bodies of the candles, you project it below. That is your take profit. Alright, so that's it. This is also almost a 3-to-1 risk to retrieve trade, which is really good. Yes, and one more thing. Hold on, let me find that example for you. So this is another way you could use fair value gaps with other concepts. Okay, so here we got sell side equal lows, which are really powerful, and we know that price is going to draw up to this fair value gap. sometime or another. Only a liquidity grab needs to happen in order to have, in order for it to have enough power to go up to that imbalance. Okay, so right away we have equal lows taken out, which is a huge indication of a liquidity grab. So of course, when it comes to a fair value gap, when it comes to taking trades with fair value gaps, you could be on the two sides of the market. You could be trading the could be trading when price goes up to the fair value gap, and you could be trading when price hits the fair value gap and moves away from it energetically. Okay, so that is your two patterns that you could use with fair value gaps. In this case, we are trading the move up to the fair value gap, right? So here we got sell side taken out. Take profit at the fair value gap, and boom, price hits it perfectly. So one thing that might help you guys by a mile is that fair value gaps are more powerful when they don't have huge consolidations behind them, but a fair value gap. Okay, so when there is a fair value gap and the price bar behind it is also a fair value gap, which is in this case is a fair gap, this makes it so much more powerful, because when price came back to that fair value gap, it did not rebalance, so it is the double of the effect that it would have on this price. Okay, so we have a fair value gap and we have a more powerful fair value gap inside the fair value gap, which is our target. So here we got the other kind of trade that I told you guys just the other minute. So stop loss above the last high, take profit at the last low. There you go, boom. 4-to-1 risk to reward ratio trade. There you go, boom. Two trades. This is a trade that you could take with fair value gaps. Either the run up to the fair value gap or the run down from the fair value gap. So one more thing that you guys could note is that when we do not have any more information of the market structure, but only a energetic range either to the upside or the downside, you have a lot of fair value gaps and you cannot pick and choose which one is the most effective, right? In that case, what you want to do, okay, is that you should not enter with the first fair value gap. So your entry should not be here. Your entry should be your entry should always be at the second fair value gap. Alright? So boom. Liquidity grab, fair value gap, equal highs, that is your take profit entry here. That's it. Here you go. So you do not take a trade over the first fair value gap, you take the trade over the second fair value gap, which is here. But of course we have a order block above it, which is more powerful than a fair value gap of this kind. Okay, so we might use that actually, but even if you use this, it will be a perfectly good trade. So So just use the second fair value gap, not the first. That's the point of it. So let's do a little recap. So fair value gaps are created when price is offered to only one side of the market, either to the sell side or the buy side. If it's in the case that is only offered to the sell side, okay, it creates a imbalance for the buyers, and that needs to get refilled. And the point that it gets refilled, it will automatically continue on the trend. Alright. Another thing that I said that is important, that ideally you would want to take trades with fair value gaps only when a liquidity grab is occurring, because that's what makes fair value gaps even more powerful. Again, fair value gaps are just a tool for you available to use anytime that you have a liquidity grab happening and you don't know where price will stop and continue on the trend. What I mean by that is that of course we know that after the liquidity grab happens, price will reverse, but you cannot know when it will reverse. Okay, then you come to a fair value gap and you use that. That is your answer. There you go. Your take profit is if it is not a exponentially big displacement to the upside. In this case, you use the symmetrical swing low, project it below that displacement or retracement. That is your take profit. In the case that it is a energetic move up to the upside, you cannot use the symmetrical swing low of it, because that is just too much of a take profit. It is just too big, and you either get your stop loss hit or you could wait more than 1 day for your take profit to hit, okay, and you do not want that to happen. Okay, so that is it for today. Like and subscribe. See you in the next video. Peace.